So if you're looking for a profitable strategy to use when trading boom and crash in 2025, then this video is for you. Okay, so first of all, why boom and crash? The number one reason why I like trading boom and crash, and why I think boom and crash is a better instrument to trade, is because boom and crash have got one of the cleanest price action that you are going to find on the market. Okay, so today I want to share with you a simple strategy that you can be using trading this boom and crash. Okay, so this strategy uses 1-2, which is the Fibonacci retracement. Okay, so we want to use the Fibonacci retracement, and I'm going to show you how to use it correctly when trading boom and crash. Okay, so the first thing that you want to do is you want to open boom and crash instrument. Okay, so for me, I prefer boom 1000 and crash 1000. So when you open those instruments, you want to go to a higher time frame. Okay, so this strategy is not for scalping. If you are looking for a scalping strategy, I've created a lot of videos, and I think on YouTube you can get a lot of instructions of how to scalp or boom and crash. But this strategy, you can use it on a higher time frame, which is why I like this strategy, because you can place a fewer trades, which means you can make few mistakes. Okay, so what you want to do is you want to open a higher time frame. I would prefer the 1 hour time frame. You can also use the 4 hour time frame or the daily time frame. If you are really in a hurry of trades, maybe you can use the 15 or the 30-minute time frame, but I wouldn't recommend those because there's a lot of spikes in those smaller time frames, which makes it hard for your stop losses to be on accurate zones. Okay, so once you open any of your chart like this, okay, so you can see that so if you look into the market, right, you are going to see that the market moves in a way of making higher highs and higher lows. Okay, so what you want is to catch a pullback like this, right? So the best possible zone to place your trade right here is this zone right here, right? But how do you know that the market is going to reverse here? Because that's the biggest question that everyone have. How do you know that, okay, the market is now reversing to the other side? Okay, so let me show you a simple tool that you can use, okay, and how to use it correctly. So the simple tool is the Fibonacci, right? But before you know how to use the Fibonacci, you want to be able to identify these zones right here. So for you to be able to place correct trades here, you want to be able to identify the high highs and higher lows of the market. So if the market is moving up, of course, it makes impulsive moves, and then it makes pullbacks, and then it continues the impulsive move. Okay, so on this impulsive move, what we want to do is we want to know exactly where does this impulsive move start, right? Because this is the impulsive move, this is the pullback. So we want to know exactly where does the impulsive move starts and where does it end, right? So we want to identify this zone and this zone, right? So that when the market reverses right here, we want to know that this is the highest point of this impulsive move, and then this is the lowest point of this impulsive move. Okay, so if you look at this market right here, you are going to see that it clearly shows that this is the impulsive move, right? So if you look from this point right here to this lower point right here, you can clearly see that this is an impulsive move. Okay, and then when this move comes back, you can clearly see that this is a pullback. So that's the first thing that you want to be aware of. You want to know exactly where is the impulsive move, and then where is the pullback coming from, right? So that you know exactly how to put this tool. Okay, so the tool that I'm talking about is the Fibonacci retracement, right? If you go to your MetaTrader, you can see it. If you use this trading view platform for deriv, you can see it by going to this toolbar right here. So if you go to your left right here, you can go to these tools right here, and you can see Fibonacci retracement, right? So how do you use this Fibonacci retracement? So what do you do? So when you identify the very top and the very bottom of your impulsive move, what you want to do is you want to start from the very bottom, or where you want so if you are in an uptrend, you start from the top side. If you are in a downtrend, you start from the bottom side, and then you go to where the impulsive move started. So now, note that we are only focusing on this impulsive move, right? We don't care about what happened before. So this impulsive move from the top here to the bottom here, you draw that, right? Once you draw that, you can drag this over. So now on this Fibonacci, what are you looking for, right? So there's one zone that I want you to pay attention to on this Fibonacci, and this zone is the zone between the 50% and the 38% of the Fibonacci. That is, some people call it the golden zone, but just take note of that zone, and this is where you are going to likely get very high probability trades, right? So what you can do, if you put the Fibonacci, you can remove all the other zones so that it's clear to see. So you just go to settings, and then you can mark all the zones that you don't want. So you leave the 0, you leave the 100, and then you remove the 61 and all the other zones, right? So just make sure that you leave the level 50 and the level 32, 38, I mean, or it can be 0.5 and 0.38. So those are the zones that I'm talking about. So you can remove all other zones right there, okay? So now you have the 0 and the 100, and this is zone right here. So this is where the market will likely come back to reverse, to make a reversal too. Mainly boom and crash, it does that a lot of times, right? So you can see the market pulls back and then comes back into this zone, and this is where you want to be placing your trade, okay? So when the market comes back into this zone, this is where you are going to be looking for your trade. So this is just an example. So in this case, the market makes a move to the downside, it reverses back into this zone right here. So which means in this zone, if the market comes back into this zone, you want to be looking for your sell trade. So what you can do is just wait for the first red candle that creates in that zone, and then you can confirm your sell trade. You place your trade and you place your stop loss above the zone of 0.38 or the 38% zone of your Fibonacci, and then your take profit should be at the lowest point of where the reversal started. And using this strategy, you can get very high risk to reward ratio. In this case, you would get a 3.86 to 1 reward to risk ratio. And what happened next is the market pushed to the downside, and this was a winning trade. Now, of course, this was an example that I cherry picked so that you can see how this works. But I'm going to show you more examples to show you that this can really work for you, right? So I want you to focus right here. If you start at the so this is our move, right? So first you have to identify our move. So the move is here. So the move is here. So this is the move, and then we want to make sure that we identify. So want to make sure that we identify the top and the bottom of the move, right? So the top of the move is here, and then the bottom is right here. So we want to see how big is this reversal. Does it come into our 50 zone, right? So we just take the Fibonacci, take it from the top now to the bottom, because we now want to go to the upside. So we start from the top to the bottom, and if we extend this, you see that this reversal comes back into the 50 and 32 zones. So this is the golden zone for Fibonacci, and this is where you want to place your trade. So once the market comes here and then you see it reversing back up, the next thing was going to be to buy your trade right here, place your stop loss below the level of 38, and then you take profit right above at this zone right here. In this case, we were going to get 1:1.53 risk to reward ratio, which was another winning trade. And you can see that for the most of the moves that you see the market going up and reversing, it comes back into the zone. Even if I take another one here, this one is just a small move, but it probably goes back into the zone. If you look at this, you can see again here, if you check, you can see that the market moved to the upside, get back into our golden zone, and then it moves to the upside. In this case, it just breached below the level of 38, which means your stop loss would have probably been hidden here. But this is just an example to show you that this strategy can work. All you have to do is to understand where is the top of the move, and then where is the bottom of the impulsive move. Once you get the top of the move and the bottom, you are most likely to get high probability trades in the market. Okay, so there's one mistake that you need to avoid when you are trading this strategy and you want to get high probability trades, right? Okay, so let's take this example right here. So if you start from the bottom to the top of the move, which is right here, and then we extend this, you probably see that in this case the market gets into the golden zone, right? You can see the market getting into the golden zone right here. But if you look at it, the market didn't reverse here. So if you had placed your trade, you could have hidden your stop loss. But if But if you can look closely here, you can see that the market just moved into the zone, and then it didn't create any red candles until it crossed all the way above the 38 level right there, right? So what you want is, you want the change of candles to happen inside this golden zone. If there's no change of candles inside this golden zone, you are not going to be placing that trade. Okay, so if you want to learn more on how to trade synthetic indices correctly, make sure you check out the link in the description. You can join our Telegram channel, it's free. Make sure you check out all those links, and I'll see you in the next one.